Hello folks, welcome to my channel. Today I am going to explain how to prepare Bollinger Bandwidth in Google Sheets. Okay, so now what is Bollinger Bandwidth? It is the difference between upper and lower Bollinger Band divided by the middle band. It is useful to foresee price movement before they happen. Lower bandwidth implies lower volatility and there could be a chance of price moving out of the range, either upside or downside in the future. Higher bandwidth implies higher volatility, and there could be a chance that the trend might fade in the future. Okay, so before going into the formula section, I will show you this is Paras. This is a period of lower volatility. As I mentioned here, lower bandwidth implies lower volatility, and there could be a chance of price moving out of the range upside or downside. Okay, so this is low volatility and it has gone up. This is higher volatility. This is lower volatility and this is higher volatility. Okay, I'll take another example of GRSE.NS. Again, lower volatility, higher volatility. Here it is volatility is low. Here volatility is high. Lower band width. Here it is higher band width. So I believe people are able to understand this. Okay. So lower bandwidth implies lower volatility. This one, and there could be a chance the price might move out of the range upside or downside in the future. Higher band implies higher volatility, and there could be a chance the trend might fade in the future. So here, this is a high volatility. Whether trend will fade from here or not, that is not the topic of the discussion. So here the topic of the discussion or the topic of this video is how to create a screener for Bollinger bandwidth. So looking at this chart, I believe people are able to understand what is lower bandwidth and what is higher bandwidth. Lower bandwidth means lower volatility, higher bandwidth means higher volatility. Okay. So what are the requirements to calculate upper and lower Bollinger band? We need 20-day simple moving average of close price of a stock and 20-day standard deviation of close price of a stock. So this slide is pretty straightforward and self-explanatory. Now, formula. For upper band, 20-day simple moving average plus 2 standard deviations. Lower band, 20-day simple moving average minus 2 standard deviation. And Bollinger band width. Upper band minus lower band divided by 20-day simple moving average and multiplied by 100. Again, this slide is pretty simple and easy to understand, self-explanatory. Now I will straight away go into the sheets. Column is stocks here, Nifty 500. I have already pre-filled it. Okay. So let me freeze. Yeah. Now, how to get 20-day simple moving average? For this, first we need to get the last 20-day closing price. So we need to type this formula in the extreme right of the sheet. Okay. So just to see whether we are getting 20 days or not. So what I'll do is, so these are some, we need to change the date format. So I'll see if I'm getting 20 days or not. Count 20 days. So this is 20 days close price. Okay. So now we got it, 20 days. Here is an important note. In the above formula, I have put minus 21. Refer closely again. 21. Okay. And to get the last 20 days closing price required for computing both moving average and standard deviation. Every day we need to check if minus 21 is returning last 20 days close price. Else change it to minus 22, minus 20, minus 23, etc. To get 20 days close price and update it accordingly in main formula in column D and column F. I'll come back to column D and column F later, but I believe people are able to understand by looking at this. Okay, so this formula people can take a screenshot. It's not very big, so people can take a screenshot and practice at home. So I have put minus 21 here. Now column D, 20 days simple moving average. So here again take screenshot of this formula. First I'll come to column D, 20 day moving average. Right? I'll type in short form 20 SMA, simple moving average. So 821 I got it. I'll do is automatic and change it to number so that I can have only two decimals. Else sometimes we'll get some 4 or 5 decimals. Yeah. Next column F, standard deviation. Again take screenshot for this formula. Column F, standard deviation. Again number. Okay. So if you go back to the slide, I have put 21 here. Just to see whether I'm getting 20 days or not. Okay. So I told you to check every day by typing here. If 21 is not returning, you maybe can change it to 22, 23, 20, whatever it is. And this 21 you need to update here as well. Here and here. Means in standard deviation we need to update that in standard deviation and moving average. Here and here. Currently 21 minus 21 means it is returning 20 last 20 days. If it is returning only 90 day 19 19 days, make it to 22 22. Okay, like this, or 23 like this. So currently minus 21 is returning 20 days, so I'm keeping it as is, minus 21. And you need to do it same here as well. So I hope people are able to understand. Okay, so now the close price of a stock. See here I'm taking price. I'll tell you why. Here close or LTP, last traded price. Okay, price means last traded price. I will show you for this. This is the last traded price for 361. This is the close price of Friday. I am recording this on Sunday. So this is the close price for Sunday. Sorry, for Friday. This is the close price for previous day, that is Thursday, and this is the last traded price of Friday. This is the last price of Friday, last traded price of Friday. This is the closing price of Friday, and this is the closing price of Thursday. So now here, if we want to get close price, that is Friday's price. I am recording this on Sunday. What do we do? Here you can type close yes. Okay, but there is a catch. I'll change it and I'll show you. Close YEST 934. 930 means it is not showing Friday's close price, rather it is showing Thursday's close price. This is happening because I am recording this video on a weekend on Sunday. So if you ask me when you put close yesterday, this one in the formula, when this will be updated. This will be updated on Monday morning, because this is Friday close price. This is Thursday close price. When I'm recording this on Sunday, instead of retrieving close price of Friday, it is retrieving close price of previous day, that is Thursday. So when this gets updated, this gets updated on Monday morning, because since it is in the weekend, maybe Google Finance is not updating the close price by Friday evening or Saturday morning or Sunday morning. Okay, this happens only if you are working on the sheet on the during weekend. If you are working on weekdays, let's say you have given this formula on Tuesday. If you give this formula on Tuesday, this will automatically take the Monday price. If you are working on a sheet on Wednesday, it will take the close price of the Tuesday. If you are working on a sheet on Thursday, it will take the close price of the Wednesday. So this will happen only on a weekend, where instead of taking the Friday close price, it will take the Thursday close price. Okay, for to in order to get the Friday close price, one need to wait until Monday morning. So I hope people are able to understand. Okay, so I change it. So you can put this or you can put price. Okay, I have put price. Now column C, lower Bollinger Band. Again, small formula, can take a screenshot and do it home. Lower band, in short I'll write LBB. Okay, now upper Bollinger Band. Again, small formula, take screenshot, upper band. If the formula is big, I will give a link in the description. But whenever the formulas are small, I suggest take screenshots and work at home. Now, Bollinger bandwidth. Again, small formula. So bandwidth, I'll write BB width. again number. Now we got everything. Close price or last traded price, lower Bollinger Band, 20 simple moving average, 20 days simple moving average, or you can say median, upper Bollinger Band, standard deviation, and Bollinger Band. I will copy. Okay, so there is a bandwidth. Now what we can do is in the above slides, lower bandwidth implies lower volatility, higher bandwidth implies higher volatility. Useful to foresee price movement before they happen. How do you see? With this screener. If you ask me how, go, sorry, data, sort a sheet in alphabetical manner, A to Z. These have a lower bandwidth, 3.79, 4.79, sorry, 4.59, 4.62, and Z to A. These have higher bandwidth, 75, 73, 68. Okay, so let's start with lower bandwidth. Asian Paint, lower bandwidth. We'll go to the chart. Lower bandwidth. Here, higher bandwidth. Higher volatility. Here, entire this period, lower volatility. Okay, so when I say useful to foresee price movements before they happen means here it is trading in a lower volatility, lower bandwidth. So these kind of stocks you can keep it in your watch list and might observe the price movement, whether it is going upside or downside. So upside downside movement may not happen very next day, but maybe you can keep it in your watch list and start observing for maybe how long, as long as you want. Maybe you want to observe this for 5 days, 10 days, 15 days, whatever it is. So whenever you see upside breakout or downside breakout, you can take buy or sell decisions at your own discretion. Okay. So next is indigo paints. We will see indigo paint again. Here higher volatility, lower volatility. So this one also you can keep it in your watch list and see upper band, or if the stock violates upper band or lower band, you can take a call, buy or sell call as per your discretion. This is how we can select. So this screener will help you to filter out stocks which are in with lower bandwidth and with stocks which are having higher bandwidth. Okay, so this will save your time as well. Like if you want to buy or sell a stock, we want to know whether about the price movement before they happen. Maybe this is a good way to filter out stocks. Okay, this is about lower. Now let's go here, higher band. Here REF it is showing kindly do, if anybody is having a doubt why for PPL Pharma it is not showing, it is showing this one, it's not showing values. For Google Finance, maybe this stock symbol not updated in Google Finance, or maybe Google Finance is not able to retrieve close price or moving averages or anything related to Google PPL Pharma. It could be volume, it could be anything. So that is the reason why it is showing this one. Okay, this. But otherwise, all other stocks you have values. Only for PPL Pharma, Google Finance is unable to retrieve values. Maybe this stock symbol is not, updated in their systems. I believe that is what I can think of right now. Okay, but except this stock, for all other stocks, it is retrieving the data: close price or last traded price, 20 SMA, standard deviation, and all. Okay, so GRSC, I have seen, I have shown you earlier. From lower bandwidth to higher bandwidth. Okay, so now higher volatility, higher bandwidth, higher volatility. What did I say? Higher bandwidth implies higher volatility, and there could be a chance a trend might fade. I'm not saying trend will fade. Okay, kindly understand, I'm not providing any advisory services. I'm only trying to make you understand how to create a screener and filter out stocks based on Bollinger bandwidth, based on its volatility. Okay, so here try to look at this. It might fade. I am not saying it will fade, because from lower bandwidth it has gone up to higher bandwidth. Okay, so maybe it can go further, or it can fall little bit down. Anything might happen. Okay, so I'm not going to provide any advisory services. This is only a screener which I'm trying to explain. And I'll take one more stock, Mazgao Dock, higher bandwidth. Okay, Mazgao Dock. Again, here lower bandwidth, bandwidth increased. Okay, higher volatility. Trend. Okay, higher volatility means trend might fade. I'm not saying it will fade. Okay, and T-Tiger, T-Tiger wagons, trend. Lower bandwidth, higher bandwidth. So you can see from here higher bandwidth stocks, and sorted again you have lower bandwidth. Okay, Asian Paint, Indigo Paint, I have already shown you. I will see randomly Anurus. Yeah, higher bandwidth here, here also little bit higher bandwidth compared with this. Lower bandwidth, higher bandwidth. Okay, lower bandwidth. Lower bandwidth implies lower volatility, and there could be a chance of price moving out of the range. I am saying there could be only a chance. I am not predicting anything. I am not providing any advisory service. This you can use it as an alert. Okay, this screener you can use it as an alert. So you can keep these stocks with lower bandwidth, lower volatility in your watch list. Okay, and you might observe whether it is going up, whether it will break out on the upside, or it will break out on the downside. And you can take your buy or sell decisions at your own discretion. So this is lower bandwidth, you can take some stocks, and higher bandwidth stocks. You can also take if you want to do short selling if trend goes other way around, like GRSE. Okay, GRSE. No, high volatility. So maybe you can keep this in your watch list and might observe later on if the stock starts falling. Maybe you can do short selling during intraday. You can see an opportunity to short sell during intraday because from here it expanded so much. This is higher bandwidth, lower bandwidth. Similarly, you can take some lower bandwidth stocks, keep it in your watch list, and some higher bandwidth stocks and keep it in your watch list. Observe their movement and can take your own buy or sell decisions. Okay, so this is how this Bollinger bandwidth helps to select stocks based on their volatility. I hope people are able to understand. This is how we can prepare Bollinger bandwidth values with values in Google Sheets. So take screenshots and do it yourself at home. Again, a disclaimer: this is only a screener, not a buy sell advice. Okay. And if you like my work, if you like my videos, kindly subscribe and share these videos with others. Okay. And yeah, thank you all.